There's a moment that catches a lot of business owners off guard. Not when the offer comes in, not even when the wire hits. It's actually a few weeks, sometimes maybe months after the sale, when the dust settles and they realize they're not quite sure what just happened. My name is Chris McClure, and after 30 years of helping business owners work through this process, I can tell you this. The regret doesn't come from the number on the check. It comes from not feeling like they controlled the outcome. Today, I want to walk you through what smart exit planning actually looks like from the inside. So you don't just sell your business, you sell it the right way, on your terms with no second guessing. And let me show you what this looks like. A few years ago, I worked with a couple named Vanessa and Greg. They ran a specialized manufacturing company. It was profitable, they had a good team, and they actually got an offer for $21 million from a private equity firm. And their first instinct was to say, yes, let's do it. Everything looks great. But when we sat down together, something just didn't quite feel right. It felt a little off. And they couldn't answer the one question I always ask at the beginning of this process. Why are you selling your business, and what does success look like for you after the sale? You see, that's where smart exit planning starts. Not with a valuation, not with a buyer, not with a tax strategy. It starts with clarity. And Greg admitted he didn't really know. He said, I just figured once we had the money, we'd sort of figure out the rest later. But that mindset is exactly what leads to regret. We spent the next few months doing something most advisors skip. We mapped out the personal transition plan, not just the financial one. What would their lifestyle look like? What would they do with their time? Where would they live? And what would give them purpose when the title changed from CEO to former owner? Once that was clear, everything else, the deal terms, the tax planning, the trust structure, it all became easier. What most people don't realize is that the way you prepare your business for sale often matters more than the offer itself. If you haven't built out the leadership team or clarified your financials or document your systems, buyers will either walk away or they'll knock a few million off the price. We helped Greg and Vanessa go from a team of 2 key people to a real leadership structure. We worked with their CPA and their M&A attorney to clean up their books, create a seller-friendly due diligence package, and restructure a portion of their equity. But here's where the tax planning became crucial. They were sitting on massive gains. Their cost basis in the business was basically zero, even after 18 years of ownership. A straight sale would have triggered over $6 million in federal and state capital gains taxes. So we implemented a 2-part strategy. First, we moved 30% of their shares into a grantor retained annuity trust, or otherwise known as a GRAP. And that allowed them to transfer the future appreciation to their children while retaining income. Second, we structured the sale as a partial installment, spreading $8 million of the proceeds over 4 years to keep them under the 23.8 capital gains tax threshold. You see, these moves saved them $1.8 million in taxes, and it created a lasting legacy for their family. And by the time they went to market, they weren't just hoping for a good offer, they were in control of the process. And they ended up closing at $24.5 million with stronger terms, a partial rollover, and the flexibility to walk away or stay on as consultants. But more importantly, they didn't wonder afterward if they could have done better. They knew they did it right. Greg told me 6 months later, Chris, we didn't just sell our business, we graduated from it. There's a huge difference. Now, I'll be honest, some of the biggest mistakes I see happen are unfortunately when owners wait too long to think about the sale. A client came to us recently about 2 months before closing. The purchase price was locked in, the deal terms were done, and he just wanted help minimizing taxes. But by that point, we didn't have a lot of levers to pull. There was no time for trust planning, no time to restructure equity, no time to stage the sale over multiple tax years. The client ended up paying an extra $2.3 million in taxes that could have been completely avoided with just 18 months of advanced planning. The difference between a reactive exit and a strategic one can be millions of dollars, and more importantly, it's years of peace of mind. And I tell clients this all the time. The best time to start planning your exit is, say, 3 to 5 years before the sale. The second best time is right now. You see, that window gives you time to do things. It gives you time to shift from an owner-dependent model to an actual leadership team that can run without you. It gives you time to do advanced planning, like moving equity into trusts before major appreciation occurs, or locking in today's values for gift tax purposes, or structuring a qualified small business stock treatment if you're eligible, and that can actually potentially exclude up to $10 million from federal capital gains. We can also align your personal goals with the structure of the deal so the exit serves your life and not the other way around. But it only works if you start early. And so let me give you one more example. A couple sold their software company last year for just over $32 million. Great news for them. But here's the difference. We'd started planning 4 years earlier. They created a family trust that allowed them to move 25% of their ownership out of their estate, legally and without triggering gift taxes. And it still helped them retain full control over the business. They actually added a non-voting board seat for their son. They implemented something called phantom stock for 2 key employees, and they hired a fractional CFO to professionalize their operations. But the real sophistication was in the tax coordination. We used a combination of charitable remainder trusts, installment sale treatments, and also something called a Delaware Incomplete Non-Grantor Trust to create what I call tax arbitrage. Essentially, it allows you to pay taxes in the most efficient jurisdictions at the most favorable rates. By the time the buyer came along, they weren't just prepared, they were attractive. The buyer offered full price with zero holdback and even asked them to stay on for 12 months as transition advisors at a rate of $400,000. The total tax savings from our 4-year planning process was over $4.2 million. But what the wife told me meant even more. She said, "We finally feel like we built something that will last for generations, not just for us." And their daughter told me later, "For the first time, I saw my parents get paid what they're worth, not for what they built, but for the way they handled the exit." And you see, that's what smart business exit planning looks like. It's not about squeezing every penny out of the sale. It's about having zero regrets after the wire hits. And here's what I've learned after guiding hundreds of business owners through this process. The ones who feel most satisfied aren't necessarily the ones who got the highest prices. They're the ones who knew they optimized every aspect, the timing, the structure, the taxes, and most importantly, how it fit into their bigger life plan. The business owners who call me years later to say thank you aren't thanking me for the money we saved them. They're thanking me for the confidence we gave them that they handled the most important financial decision of their lives as well as it could possibly be handled. And if you're thinking about selling, or even if you're just starting to entertain the idea, this is the time to map out a plan. This kind of comprehensive exit planning works best for business owners with substantial value, who understand that how you exit is just as important as how you built it. We only work with a limited number of business owners each year because this level of planning takes deep coordination across multiple teams and a real relationship built on trust and understanding. But if you want to walk away from your business knowing you handled it right, both financially, personally, and strategically, please use the link below to schedule a conversation with our team. There's no cost for the meeting, and we'll walk through your business structure, your family goals, and your timeline, and give you a clear picture of what's possible with proper advanced planning. We're kind of selective about the clients we take on, but when there's a good fit, the impact can be really transformational. Because when it's done right, selling your business shouldn't feel like the end of something. It should feel like the beginning of the next, even better chapter, where you have complete confidence that you squeezed every bit of value and efficiency out of the most important transaction of your life. I really love doing these videos, and I hope you'll join me on the next one.